10,000 people woke up to discover their insurance had vanished. Footprint Underwriting ceased trading without warning. Policies worthless. Claims unpaid. And the people responsible? They might walk away untouched. Footprint Underwriting was not some back out about that for a second. This is not about one bad company making poor decisions. This is about an entire segment of the insurance market potentially being unsustainable. And if specialty insurance continues collapsing, entire industries that depend on that coverage will face impossible choices. Build without insurance and risk everything. Or stop building entirely. The construction sector alone represents billions in economic activity. Now imagine that grinding to a halt because nobody can get coverage. If you want to see where this crisis leads, make sure you are subscribed because the next part changes everything. Runoff specialists have already circled Footprint like vultures waiting for their moment. These firms specialize in managing dying insurance books. They take over administration, handle legacy claims, and theoretically protect policyholders during the wind down. But their interests are not perfectly aligned with yours. Runoff managers get paid regardless of whether your claim gets honored. Their incentive is efficient liquidation, not maximum claim payment. Every dollar they save on claims is a dollar that flows elsewhere. This creates an adversarial dynamic that policyholders rarely understand until it is too late. You thought you were dealing with your insurance company. Now you are dealing with specialists whose entire business model is minimizing payouts while maximizing administrative efficiency. And that, my friend, is where things get truly ugly for claimants. Drop your prediction in the comments. Do you think these policyholders will ever see full compensation? Here is what the Footprint collapse reveals about our entire insurance system. The protection you think you have exists only as long as the chain of companies behind it remains solvent. Your broker sold you a policy. An MGA underwrote it. Capacity providers backed it. Reinsurers spread the risk. Break any link in that chain and your protection evaporates. Most consumers never think about this complexity. They pay premiums and assume coverage exists. But the Footprint situation proves that assumption can be catastrophically wrong. The real scandal is not that Footprint failed. Companies fail all the time. The scandal is that 10,000 policyholders had no meaningful way to assess their insurer's stability before purchasing coverage. They trusted a system that gave them no tools to verify that trust. And now they are paying the price for that blind faith. So what happens now? Affected policyholders should immediately contact their brokers to explore alternative coverage. Document every communication with Footprint or their runoff managers. If you have pending claims, consult with an insurance attorney about your options. The legal landscape for failed insurer claims is complex but not hopeless. Some policyholders may receive full compensation through FSCS. Others may recover partial amounts through the runoff process. And yes, some will likely receive nothing. The Footprint situation is still developing. Regulators are investigating. Legal actions are being prepared. And the specialty insurance market is reassessing its entire business model. But one thing is certain. The next time you purchase insurance, you should ask harder questions about who actually stands behind that policy. Because as 10,000 people just learned, a piece of paper means nothing if the company behind it vanishes. Now you understand why the Footprint collapse matters far beyond the 10,000 directly affected. Subscribe for more legal analysis where we break down the cases that reveal how justice actually works. What insurance nightmare have you experienced? Tell me in the comments. Your story might become our next investigation.